Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to yet another promising edition on the Extreme Speed Live. Happy Monday to you. It's the new week. Happy new week to everyone, and welcome to the first edition of this new week. Well, let's run through our daily routine to confirm that we're truly on the same page. So, if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So typing in hi will just make me confirm that we are all on the same page, and I will just kickstart the session. So I look forward to seeing your comments in the comment section. So let's see what we have here for today as we dive into the first edition for the week. Okay, I can see some handful of comments here. So I can see Hanwan. Okay, I hope I pronounced that correctly. Rambo 5955, NSD NZD. Good morning to you. Hello, Carrie. Good morning, and thank you very much for this confirmation. So, on this note, I want to be welcoming you once again to yet another insightful edition of the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you through the current market structure using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insights into the historical price movement of the assets on our watch list for this week. Well, today being the first day of the week, is a very good opportunity for you. If you have any assets you want us to look out for this week, it could be the commodity, cryptocurrency, currency pairs, as whatever options you have, let me know in the comment section, and I would ensure that I incorporate it into our plans for this week. But well, for me personally, I have some handful of assets I would like us to look at this morning, and in fact, I have very interesting and of course simple setups that we are going to be using to guide our decisions. With that being said, here I would like to welcome those who are joining us for the first time. You're highly welcome on board, and I'm very excited to have you around with us. And what we simply do here as technical traders, we gather here as a community in anticipation of the New York session, where we come to review our existing positions, if we have any, and of course, see how we can strategically position ourselves ahead of the New York session. So this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I encourage you to stay tuned in so you don't miss out on any of these valuable ideas we will be talking about today, and of course be part of the subsequent editions, as the more time you spend with us, the better you get in understanding how to utilize this information in making your own independent trading decisions. So once again, you are highly welcome on board. Now, with that being said, here we shall be diving straight into the business, and as usual, the first thing we usually do is to check on the economic calendar. For those who don't know, understanding the economic calendar isn't just about fundamental analysis, it's a crucial aspect of technical analysis too. We can easily identify potential correlations between key economic releases and specific technical patterns on the chart, and by knowing when major economic announcements are scheduled, we can anticipate potential volatility spikes, trend reversals, or even breakout opportunities. So it's just like having a roadmap that guides our technical analysis decision. So I implore you to stick around as we run through what everyone will be looking forward to in terms of the fundamental factors. So, on the economic calendar for this week, we usually focus on high impact event, and of course, based on what I have on my watch list for this week, we will be looking at the United Kingdom and of course the United States economic docket. Now, for today, we do not have any high impact events. So, what I did instead was to include the medium impact event. At least let's have, as the new week has started, let's have something to hold on to as a guide for some volatility to happen in this market. So this morning, the first event came in from the United Kingdom, and of course, we have Hu Peel, who had a speech this morning. Hu Peel is the chief economist and executive director for monetary analysis and research of the Bank of England, and of course, is a member of the Monetary Policy Committee of the Bank of England. And of course, whatever he says this morning is definitely going to be giving us an insight into the monetary policy of the Bank of England and, of course, the economic outlook of the United Kingdom. Well, this had already happened, though I'm here to have an highlight on what is said. But before the end of today and by tomorrow morning, I will be giving you an update on that one. Now, the next one here is the New York Empire State Manufacturing Index, which is coming up in about 2 hours from now, and this is from the U.S. economic docket. Now, the Empire State Manufacturing Survey is conducted by the Federal Reserve Bank of New York, and it gauges business conditions for New York manufacturers. Well, generally speaking, a high reading is considered as positive for the US dollar, while a low reading is considered as negative. Now, if we look at the previous data for the month of September, you will see here that the data came in at 1.9, and we have a consensus projection of -7, which is not a palatable figure if you ask me, considering where we are coming from. And because of this variance here, the expectation is more of a contraction in that sector. So we are going to be looking forward to what the actual data will be, and is it going to be beyond expectations, below expectations, or even just as expected? Then much more later today, we are going to be looking at the monthly budget statement from the United States. Well, there is no time frame put to this one yet, but I'm of the opinion that as the event draws closer, we will be having a specific time frame on that one. So the monthly budget statement is released by the Financial Management Service, and it of course summarizes the financial activities of federal entities, disbursing officers, and Federal Reserve banks. Now, from what we have here, the previous balance sheet came in at $89 billion, and we have a consensus projecting a deficit of 78.6 billion, which is not on the positive side at all. And with this figure, it's clear that there is going to be some contraction in the budget statement. So we look forward to what the actual data will be on that one. Then later in the day, we are going to be witnessing the speech from Patrick Acker, who is the 11th President and Chief Executive Officer of the 3rd District Federal Reserve Bank at Philadelphia. And he also serves as an alternate voting member of the Federal Open Market Committee, the FOMC, and whatever he says also has a weight in the financial landscape. Remember, he also had a speech on Friday where he was more of leaning towards the stalling in interest rates hike, as he's saying that the inflation data that came in last week is not revealing any element of strong inflation in the economy at this point. So we also want to see what he will be saying in follow-up to what he said on Friday, which of course will be giving us an insight into the monetary policy of the Federal Reserve and of course the economic outlook of the United States. So with this information we have here, as technical traders, the next thing we want to be doing right now is to go on into the chart. Let's sniff through the current market structure to look out for patterns and structures that will give us the leverage to position ourselves ahead of the next move in the market. As usual, the first asset we are going to be looking at this morning is going to be the US oil spot. Now, on the US oil spot, I'm beginning to notice an interesting setup gradually unfold on the chart. I don't know what's happening. My chart is loading up slowly. Okay, here we go. So we begin to see a very interesting setup going on the chart right now. But before we run into this, let's quickly see what led into my decision on the lower time frame. And as a result of this, we are going to be taking an holistic perspective into the market, and to do this we shall be scaling up into the higher time frame. Now, on the higher time frame, well, if you look at what has been going on in this market since the month of June, it is quite clear that the market is on a strong bullish momentum. However, there is an interesting and simple trading setup I was able to spot on the 4 hours time frame, which is going to be our center of focus for today's holistic view. Now, what I did here on the US oil spot was to take into consideration the nature of price action since the beginning of the hold on a second, since the beginning of this month, and it is quite clear that price action has been on a strong bearish momentum. And going into this new week, there are two pivotal factors that is likely going to be shaping the trajectory of oil markets. First and foremost is how much the conflict in the Middle East could escalate and its potential implications on supplies in the world's leading oil producing region. Then the second crucial factor lies in the anticipation of Wednesday's update on the US crude stockpiles, a report that promises significant insight into the market direction. Now, looking at things from a technical standpoint, that is since the beginning of this month, it is clear that price had been bearish. As you will see, price had transitions into lower highs, and in fact, after connecting the series of lower highs here, we had this beautiful descending trend line marked out on your chart right now. And of course, you know how we use our descending trend line in this community. As long as price remains below the descending trend line, we want to continue to hold on to a bearish bias. However, if the trend line is breached or broken out of, then we want to start considering buying. Now, something interesting happened at the beginning of last week, as you will see right here. Despite the strong bearish momentum, we saw our price did break out of that descending trend line for the first time this month, and then price transitioned into a consolidation phase. And of course, you know that when price breaks out of a trend line, we expect it to come back, retest the trend line, which it actually did, and a couple of buy pressure around that area incited buying opportunities for us in this community last week, Thursday and Friday, and thank goodness we were able to capitalize on that bullish move as we rode that move all the way to the upside. Then, in addition to the descending trend line here, there is another structure here which further emphasizes the strength of the buyers here. Now, despite the strong bearish momentum since the beginning of this month, you will see that sellers are beginning to find it difficult to continue that momentum. As you will see, as soon as price got into the $81 zone, we saw how sellers found it difficult to go on further. Then this, look at what happened again. Price was unable to break down the previous low, giving us a higher low here. And whenever we notice such situation, it's a sign that buyers are gradually gaining momentum behind the scenes. And when we notice a reversal pattern like this in the form of a double bottom structure, the next thing we want to be doing is to mark out a key level that we will be using to guide our independent trading decisions. And look at what we have here. We have a neckline situated at exactly the $85 area, which happens to be our key level for this week. And of course, we want to see price break out of this neckline to validate and confirm that reversal pattern for us. And look at what happened on Friday of last week trading session. We saw the breakout of the neckline, hereby confirming that we are going bullish. Now, with this situation here, how do we intend to position ourselves ahead of the new week? Now, within this whole reversal pattern double bottom structure here, there is another double bottom structure within the structure. Now, look at what I have here. Look at, it's quite interesting, isn't it? We have another double bottom structure here with another neckline around the $83.50 level. Now, from a technical standpoint, when we cite a breakout of necklines like this, we expect that price action will come back at some point to retest the structure to incite an uptrend continuation. Now, we don't know if there's going to be a retest of structure, and if there is going to be, how far will that retracement phase go before the uptrend scenario happen? Now, this is where this zone here comes handy. So we have a zone right now between the $85 level and the $83.50 level. So if this week starts on a bearish note, I want to be looking forward to the culmination of that retracement phase in the structure, where the appearance of a buy setup will be welcoming an opportunity to buy. Now let's scale down into the 1 hour time frame to see if the market is going to be retracing to the downside, or we might likely see a scenario where price will just continue to find new highs. Now, in that regard, we want to see how the market participants has been reacting to the structure around the $86.50 level since the beginning of this week to decide what our next line of action will be. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, during the early hours of today, in fact, in the last 12 to 13 hours now, you will see here that price action had been confined within a range that is between the $86.60 level and the $85.90 area, to emphasize the level of uncertainty at this juncture in the market. Now, you know how we treat our flat channels in this community, especially when price is caught within a range. We have no other choice than to exercise patience, waiting for either the breakout of the resistance line for buying opportunity, or the breakdown of the support line here for selling opportunity, which of course may incite that retracement phase we were talking about earlier on the 4 hours time frame. Now, with this perspective in mind, we have no other choice than to hold on for a signal in the form of a breakout of this range. So our center of focus today is basically between the $86.60 level and the $85.90 area. Now, how do we intend to join any positions here? So first of all, let's talk about the potentials the sellers have at this juncture. Remember, I was talking about a potential retracement into the neckline to retest it for another wave of bullish momentum, which of course I said is a zone between the $85 and the $83.50 area. Now, if price breaks down the support line of this range at the $85.90 level, we want to be selling. Now remember, because this is a strong bullish momentum we've been witnessing here in the last 1 week, it's very reasonable that we wait for confirmations before we join the sell move. Now, if we are going to be selling, we want to see price break down the $85.90 level first of all. Then we want to see a retest of structure, revealing signs that buyers are finding it difficult to climb and stay above the $85.90 area, which of course will reflect on the chart as continued selling pressure below the structure to incite a downtrend move. So this is the only condition that will make us want to consider selling the US All Spot today. So we want to see price break down and retest the $85.90 level. And if this happens, remember our TP target is going to be between the 85 and the $83.50 zone, which is the zone we identified on the higher time frame, which is around the neckline of both reversal patterns we saw. And this of course will dovetail to a minimum of 100 pips to a maximum of 250 pips. So let's see if the market will break down that structure to retrace it in anticipation of an uptrend continuation. However, in as much as we talked about the potentials of sellers, you know how we do it in this community, we cannot ignore the potentials that buyers also could take over this market. And if buyers are going to take over this market, what is it that we want to see on this chart that will make us feel comfortable shifting our buyers from bearish to bullish? Now, on this structure here, it is quite clear that we have been witnessing a strong bullish momentum since last week Thursday, and following the impulsive leg price action appeared to transition into a consolidation phase, which appears it is likely transitioning into a bullish rectangle pattern, which is known to be a strong uptrend continuation pattern. In this case scenario, because of the fact that price is very bullish, I want to have a buy stop order above the resistant line of this range to capitalize on the uptrend continuation. So if this happens, we want to be part of a bullish move and ensure that you have your stop loss in place anywhere around that support line of that range. Around the $85.90 level seems most appropriate to secure your positions. While you secure your position, please note that you do want to give enough room for price action to breathe. So between 60 to 70 pips in this case scenario seems appropriate to put your stop loss for this uptrend continuation. So let's see how the market will play out from this area. This is my view here on the US All Spot for today. So our center of focus for today is basically between the $86.60 level and the $85.90 area, where depending on the direction the breakout happens will determine what our next line of action will be. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. So I don't know if you have any questions as regards to my explanations, or you need me to do further clarification in any aspect. Feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see your comment, Stefan85, PP28, Priv, And I'm Sam. Good morning to you guys. Glad to have you around with us this morning. So, in the absence of no questions, I want to assume that we are all on the same page here. So, in that regard, we shall be moving right into the next financial asset. So the next asset on our watch list for today is the USTech 100, which is popularly known as the Nasdaq. And in fact, on the Nasdaq, we are beginning to see some indecisive situation going on right now, and I'm of the opinion that majority will be looking forward to some economic catalyst that will give us a sense of direction here. But before we go into the details here, let's run through the higher time frame so that we can all see what is going on from a long-term perspective in this particular market. Now, what I did here this morning while trying to dissect the current market structure was to, of course, start with a daily time frame. And remember, we have been deliberating on this daily time frame for a very long time, as you will see that since the beginning of this year, price action has been on a strong bullish momentum. And in fact, if you look at this closely and taking it a step further to connect the series of higher lows, here we have beautiful ascending trend lines to work with. So we have this major ascending trend line, which is a thick dotted line on your screen, while we also have the temporary ascending trend line, which is the thin dotted line on your screen. But for this week, we are going to be focusing on the major ascending trend line, which is the one highlighted on your screen right now. And of course, you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we will continue to look out for buying opportunities. However, if we take into consideration what has been going on in this market in the last 3 to 4 months now, I think June, July, August, September, October, that is the last 5 months, you will begin to notice the potentials that sellers are beginning to gain some momentum. As you will see that since price action climbed above this key level at the 14,850, we have seen a reduction in the momentum of the buyers, and this is very evident with the lower highs that happened around this area, which further emphasize that sellers are trying to push price to the downside. But as long as price still remains above this key level at the 14,850, the potentials of the buyers is still very possible in this market, and the only thing that will make us feel comfortable selling here is to see price break down that 14,850. Remember, this zone has been a strong buying niche since the month of June. Look at what happened here. Buy pressure came in. Look at what happened here in the month of August. Another buy pressure as sellers continue to find it difficult to break through that area. Now, what happened here in the last 3 weeks was also quite interesting. As you will see, buy pressure again resumed, and interestingly lines up with that ascending trend line to incite the idea that the trend line is still strong enough to negate any bearish momentum here. Now, this further confirms that buyers still have a potential of pushing price to the upside, and the only condition here to sell is to see the breakdown of both the ascending trend line and the 14,850, where a retest of structure will be inciting that sell-off right there. And of course, this is yet to happen at this point. Now, last week we saw how we saw this reversal pattern. Of course, we all took advantage of this opportunity last week, where we had the 14,850 as the neckline of that reversal pattern, and we saw the breakout of the structure. As you will see here, price climbed up into the trend line, and since has started doing some retracement since the midweek of last week. Now, the question for me at this juncture is, will price retrace back into the neckline, where the appearance of buy pressure here will be inciting that uptrend continuation. And one interesting thing about the neckline here is the fact that it also lines up with that ascending trend line. So what we want to do here is to try and see how the market participant will be reacting to the structure around that psychological level at the $15,000 mark to decide if we are going to be seeing some selling pressure back into the neckline before an uptrend continuation happens, or how we're going to be seeing the bearish pressure push down, breaking down the ascending trend line at the 14,850 to incite a sell-off. However, there could also be the potentials that buy pressure could resume along the 15,000 area where participants feel this price is cheap enough to buy and incite an uptrend scenario. So whatever happens here on the 1 hour time frame is going to be giving us a clue into how to position ourselves for this week. Now let's scale down into the 4 hours time frame, and on the 4 hours time frame, this is what I saw here. And in fact, we have the $15,000 level, strong psychological level right there. We have this ascending trend line that we marked out was guiding trading activity throughout last week. And right now, price action is right around that ascending trend line, lining up with that $15,000 mark. What a beautiful confluence to look out for trading opportunities here. So if buy pressure persists here and we have a situation that transitions into a reversal pattern, let's say double bottom structure, then a breakout of the neckline at the 15,060 will be welcoming that uptrend continuation. However, a breakdown of this trend line could incite selling opportunities where, depending on how price reacts to the 14,850, could welcome an uptrend continuation or a downtrend scenario. So now let's scale down into the 1 hour time frame so we can understand the psychology behind the trading activity of market participants since the beginning of the week around this area. Now, scaling down into the 1 hour time frame, things now becomes a little bit much more clearer. Now, this is the $15,000 area, still very intact, as price action since the beginning of this week has been oscillating around that area. Now, it's a very crucial level we have right now. And in fact, you see that in the last 11 to 12 hours, price action has been confined within a range between the 14,980 level and the $15,065 level. This further emphasized the level of uncertainty going on here. And of course, you know how we do it in this community. Whenever price action falls into this uncertainty, into this kind of range, we usually exercise patience, waiting for either the breakout of the resistant line of the range for buying opportunities or the breakdown of the support line of the range for selling opportunities. Now let's look at what is going on here. The 14,950 and the 15,000 area has since been a buy niche, as you will see. Looking at the nature of the week of these candles, you will see there are sharp rejections, giving us hammer candle sort of a thing, which is, from a technical standpoint, a sign that buyers are still very, very present around this area, which for me now buttresses a bullish expectations in this market. Now, for me to buy the USTech100 today, I would rather want to see price take out that resistant line there at the 15,060 to capitalize on the uptrend move. And if a retest of structure happens, we want to feel very confident in a buy position here. So in this regard, I want to continue to maintain a bullish momentum. And of course, the fact that price still remains above that ascending trend line we spotted on the higher time frame makes it much more easier to expect a bullish move at this juncture. Now, with the way things are going right now, we cannot ignore the potentials of sellers too. We are at a crucial juncture where if price breaks down the 14,980, it would have also broken down of that ascending trend line to incite a sell-off here. Now, if we are going to be selling at this juncture, remember we are not getting too excited at the breakdown of that support line and the ascending trend line. I want to see some confirmations before I jump in. So we want to see a breakdown happen, price closing down below that structure, then a retest of structure giving us signs that buyers are finding it difficult to climb above the ascending trend line, and this of course would reflect on the chart as retest of structure, multiple selling pressure below the structure to incite a downtrend move. This is the only condition that will make us consider selling the USTech 100 today. So let's keep this in mind. Mark out these levels on your chart. This is where our center of focus is today, the 15,060 and the 14,980, where the direction of the breakout of the structure will be welcoming a trading opportunity for us today. So mark out these levels, very important. You will be needing them as a reference point to guide your independent trading decisions for today's trading session. So I do hope I made myself very clear here. If you have any questions or you want me to do some clarifications or you need me to shed some light on a particular aspect, feel free to let me know in the comment section. So I'm going to be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart. All right. So, in the absence of no questions, I have taken this as a confirmation that we are all on the same page and good to go. So, on this note, I will be moving on to the next asset on our watch list for today. All right. All right, everyone. The next asset on our watch list for today is the GBPUSD, that is the cable market, and it's another intriguing setup we have right now, and price is still looking a little bit bullish, but the potentials that sellers could come in is still very there. But before we run through this detail, let's quickly take a quick look at the higher time frame, where we want to understand the holistic perspective in this particular market. So on the daily time frame here, what I did was to take into consideration the nature of price action since the month of July. And if you look at the structure, since price tested that highest point there at the 1.3140 area, you will see that price at nose dive to the downside, falling into a bearish situation here. And after connecting the series of lower highs and lower lows, we have a descending channel to work with. So this is the resistant line of the descending channel, and when we connected the series of lower lows here, we have the support line of that descending channel. So we have a beautiful setup to guide our trading decision for this week. Now let's zoom into what happened last week in this situation. Now, as soon as price action tested the resistance line of that descending channel, we saw the emergence of this strong impulsive bearish leg which pushed price to the downside. Now, the question here is, will price action, considering this bearish momentum, retrace into our golden zone area, maybe a 50 to 78.6% retracement of that impulsive move to inside an uptrend move? Or are we going to be seeing a situation where price will go on to climb, drop down into the support line of that descending channel, maybe to continue to respect it or even break down to incite a sell-off here? Now, to be able to dissect this appropriately, we need to see what is really going on around that 1.21500 area since the beginning of this week. And in fact, I had a setup on the 4 hours time frame which we are going to be using to guide our trading decision for this week. Now, the first thing I did here was to acknowledge that 1.21250, which is going to be my key level for this week, as you will be seeing right here. And the reason why I had this level marked out is the fact that it has played a major role in determining the direction of price action since the last week of the month of September here. And of course, one peculiar thing about this line is that we see here that sellers have always struggled whenever price comes into this area. Though we had the breakdown here, but immediately price climbed up, and since then price had maintained its stance above that area, which further emphasized the strength of the buyers around the structure. Now look at what happened on the last trading day of last week. We saw that as soon as price came in here, despite that strong bearish momentum, and we had a sharp rejection, revealing the presence that buyers are still very strong around this area. So as a result of this, I'm having this whole zone here as a temporary demand zone, and I'm of the opinion that this could be a platform that could incite another wave of bullish momentum. However, in as much as we're looking out for buying opportunities above this key level at the 1.21250, we cannot ignore the potentials that sellers could break down the structure, retest is to incite a sell-off, which of course we do want to be part of. Now, with the information we've gathered here on the higher time frames, we do want to scale down to the lower time frame and see how market participants have been reacting right above that key level at the 1.21250 to give us an idea of where price is likely going for this week. Now, to do this, we scale down into the 1 hour time frame where we'll begin to see things more clearly. Now, right here on the 1 hour time frame this morning, while trying to understand the nature of price action since the beginning of this week, it is quite clear that the new week has started on a bullish momentum. See where price started this week. It started at around the 1.21375, and it continued to find higher highs and higher lows, leading to a situation where it broke out of the 1.21625. Now, with this situation here, we had an ascending trend line marked out, and looking at the structure here, it appears price has broken down that ascending trend line. Now, the question here is this breakdown a true breakdown? Is it a valid breakdown, or will it turn out to be a false breakdown where price will climb back above the ascending trend line to incite more buying opportunities? Well, in this case scenario, for me to buy the GBPUSD today, I would rather want to see price climb back above the ascending trend line and then continue upward, breaking out of the highest point where price action has been for this week, which is at the 1.21750. So buying the XAUUSD will only be valid as long as price breaks out of the 1.21625 level. So that is the only condition that will make us consider buying the GBP USD today. So break out of the 1.2167625 here, have a position running at the site of buy pressure, then have a stop loss right close to this support line here, which is about 20 pips thereabout, and then look out for more opportunities to buy as soon as price breaks out of the 1.21750 level. So that is how we are going to be buying this. But if price action remains below the ascending trend line and we begin to see that buyers are finding it difficult to climb above the trend line, this will of course reflect on the chart as continuous selling pressure below the structure. Then at this point, we are going to be seeing a downtrend continuation. Now, if this happens, we sell the multiple selling pressure. We have sell stop orders below structures below the 1.21375, and a further breakdown of our key level at the 1.21250 will welcome more selling opportunities here. So this is how we are going to be managing our positions for today, and at least for the first half of this week. So you can see how important and strategic that ascending trend line is here, as it will be determining what our next line of action will be. If price remains below the descending trend line, we'll look out for selling pressure, look out for setups and conditions that supports the idea of selling. But if price breaks above the ascending trend line, then we want to be looking out for patterns and structures that supports the idea of buying this asset. So this is my view here on the GBPUSD. So you want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I don't know if you have any questions. Please, if you do, let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out those levels on your chart, as you will be needing them as reference point to guide your trading decisions for today's trading session. All right. So in the absence of no questions, I want to assume we are all on the same page. So in that regard, we shall be moving into the last asset on our watch list for this week. So the next asset on our watch list for this week is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And on the gold spot here, oh, sorry for the breaking transmission, sorry. So the next asset we are looking at is the gold spot here, and if you look at the structure since this week began, gold prices have started the new week on a slightly weaker note, retracing from Friday's multi-week high after a breakdown of this 1918 level. Now, the big question is whether this is a retracement of the impulsive bullish move, representing, of course, a natural correction after Friday's significant rise, or is it going to be a sign of an outright sell-off? Well, if we look at the psychological aspect of this market, it shows that investors are trading cautiously, closely analyzing the development over the weekend, particularly those related to the Middle East conflict. And amidst this uncertainty, we are going to try and see how we can position ourselves for the next move. Now, before we go into the details here, let's run through the daily time frame. I think I started my analysis on the daily time frame, I guess. Hold on a second. I think I started on the daily time frame. Let's see. Okay. So right here on the daily time frame, you will see that price since the month of May, price are transitioned into a bearish momentum sort of a thing, having this descending channel in place. So after connecting the series of lower highs here, we have the resistant line of the descending channel and the lower lows of the descending channel, giving us the support line of that channel. Now, its interesting price has been very bearish, at least in the last 3 to 4 months. Now, in addition to that channel is our key level for this week, which is the very crucial 1900 zone, which price appeared to break out of at the end of last week. If you look at this 1900 area, especially since the beginning of this year, you will see how it had played a major role in determining the direction of price action. So let's start from the beginning of this year. In the month of January, you will see how the 1900 was serving as a demand zone before it was broken to the downside in the month of February. Now look at the month of March, it climbed back above the structure, and since then price action had remained above the 1900 all through the month of July, August, and of course the month of September here. Now you can see how this level had played a major role in determining direction, and not until the last week of last month we saw the breakdown of that structure to the downside to respect this support line of that descending channel. Now, with the situation we have here, I'm going to be using the 1900 level as a yardstick to guide our trading decisions for this week. So what this simply means here is that as long as price remains above that 1900 area, we shall feel comfortable in a buy position, and if price breaks down the 1900, then it will be a situation where price is back into seller's territory to incite a sell-off here. Now, to guide our trading decision for this week, I was able to spot a setup on the 4 hours time frame, which you will see right here. So if you look at the structure here, you will see that price, we have the 1009 area, that demand zone I spotted here earlier, and price is just right back above the 1900, which means that we are back within the buyer's territory. Now price closed above the one around the 1930 for last week, breaking out of this resistant line here. So my question at the beginning of this week was actually that we might see a situation where price retrace back into the trend line, which is already happening right now, to incite an uptrend move, or we could have a situation where price retrace back into the 1900 area, where the appearance of buy pressure will welcome buying opportunity. Well, for me personally, the whole structure here is screaming bullish in all ramifications, and the only condition that will make me sell here is for price to drop down below the 1900, and as long as price remains above the 1900, I want to be looking out for market conditions that support the idea of buying this asset. Now, to understand things better here, we want to scale down into the 1 hour time frame so that we can see how market participants have actually been relating to this current structure. Now, if we scale down into the 1 hour time frame, now we begin to see things more clearly. And in fact, in that regard, I have a very simple setup that we are going to be using to guide our decisions for today. So this is the neckline, this is the key level at the 1900 right here. And one thing I noticed this morning was this range. Price started the week around the $927.50 level started a bearish momentum leading to the breakdown of the $1,918 area. Now, with the way things are going right now, though it's a strong bullish momentum we saw on the last trading day of last week, it appears that price action wants to go through a retracement phase, which is as a result of some profit-taking activities going on behind the scenes. You know, from a psychological perspective, that whenever we have traders buy at a cheap price like the 1,860 or 870 area, we expect that some point in time they would want to be closing in some of their position to lock in some profits, which would reflect on the chart as a retracement into our golden zone area before the uptrend continuation happens. So for me to guide our trading decision today, after considering this strong selling pressure that started this week, I'm of the opinion that we might be seeing a retracement into structure before the uptrend move. Now, to project where the retracement phase might likely end before the uptrend starts, what I did here was to bring out our Fibonacci retracement tool, run it through the previous impulse leg, and aim at that area or zone between the 50 and the 78.6% of that impulse leg. And interestingly, that lines up with the 1,900 and the 1,880 zone. So if the sell pressure continues as it is right now, I want to see it come into anywhere around here where the appearance of buy pressure will be welcoming an opportunity to buy. Now let's consider the bearish momentum that started this week here. Now we have price breakdown the 1,918, and from a technical standpoint, when price breaks down a key structure such as this, we expect it to come back, retest the structure to incite the downtrend scenario. Now at this juncture here, price is back into the 1,918, and it is very important that we exercise patience here to see how the market will be reacting to this 1,918 zone. So if we continue to see selling pressure around that area, that means price wants to retest the structure to incite a downtrend move. So we do want to be on standby to sell. Then a further breakdown of the 1,908 will welcome more selling opportunities, and a further breakdown of the 1,009 will welcome more selling opportunities. And remember, this is our potential zone, looking out for more for buying opportunities here. So that is one way we are going to be using to manage our decisions on the XAUUSD today. However, if price continues to climb up and find higher highs, then I want to be looking at buying anywhere above that resistance line, that is the highest point price action has been for this week, and of course the 1,930 zone. So I want to be looking at buying above that area, and in that regard I have buy stop orders above those structures. However, it is likely that we can still see an opportunity to buy even before the breakout of that resistance zones happen. And how do we do that? If we can see higher highs and higher lows, that is price climbs above the 1,918 and continues to find higher highs and higher lows, then we do want to be joining a bullish move, after which a breakout of both the $1,927.50 level and the $1,930 area will be welcoming more opportunities to maximize the potential of that bullish move. So this is how we are going to be managing our position today. So for today's trading session, the 1,918 level appears to be playing a major role at this juncture. That is, if selling pressure persists below the structure, we look out for selling opportunities and more opportunities at the breakdown of the other levels we identified here. However, if price remains above the 1,918 and we start seeing higher highs and higher lows, we want to join a bullish momentum, which may further lead to the breakout of those resistance line to incite more buying opportunities on the XAUUSD. So this is my view here on this asset. You'll see it's quite a simple setup. you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. So I don't know if you have any questions whatsoever as regards to the current setup or any of the assets we talked about since the beginning of today. So if you do, feel free to let me know in the comment section. So I will be taking another 10 to 15 seconds off to wait for your inquiries, and you can also use that time to mark out these levels on your charts. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And it has been quite a wonderful moment with you guys this morning, as I enjoyed every single bit of the experience. And thank you for staying tuned in and being part of the session through its course. And for those who are joining us for the first time, I do hope that you are able to gain one or two things from what we discussed here today. And I encourage you to be part of our subsequent editions, as the more time you spend with us here, the better you get to understand how this strategy works and eventually be able to apply them on your independent trading decision on your own account. So once again, you're welcome on board. So today we were able to attend to 4 major assets, which we shall be monitoring throughout the course of this week. And they are the US All Spot, the USTech100, which is popularly known as the Nasdaq. We also treated the GBPUSD, and finally the XAUUSD, which is popularly known as the Gold Spot, and all of which we were able to identify simple setup using fundamental tools such as trend lines, key levels, and of course chart patterns to strategically position ourselves ahead of the New York session. So allow your setups to unfold and mature before you jump into the position, and I do hope you marked out these levels on your chart and ensure you have adequate risk management strategy to support whatever decisions you are making. So on this note, I want to wish us all the best of luck today, and do have a wonderful weekend. Have a wonderful day, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well these assets have been doing so far, and how we are going to be getting ready for tomorrow's trading session. Do have a wonderful day, everyone. Bye bye.